You are listening to the Innovators Behind Disruption, a podcast series brought to you by Evolve ETFs. The world is evolving. Your investments should too.
Hi, everyone, and thanks for joining us today. My name is Raj Lalla. I'm the CEO of Evolve ETFs, also joined by Elliot Johnson, who is our CIO, and of course, our very special guest, Anthony the Pomp Pompliano. Very popular podcast out there, self-titled The Pomp, with over 20 million downloads. Definitely one of my favorite podcasts. He typically will interview a lot of business leaders in the area of finance, technology, of course, Bitcoin as well. I had the opportunity to be on his podcast last year, and it was great. In addition to his podcast, some of you may not be too familiar that he's actually quite an entrepreneur as well. And also an early stage investor in a number of companies, including Airbnb, Reddit, Coinbase. Built up a portfolio of worth over $500 million. So congratulations, Anthony, and thanks for joining us today.
Absolutely, thanks for having me.
So do we call you the Pomp, or do we call you Anthony, or what do we call you?
My preference does not matter. My mom named me Anthony though, so that's what she calls me. Everyone else, they call me all kinds of different stuff.
How did the Pomp get started though, by the way? Is this something that you were called in high school?
I think that a football coach yelled at me once and didn't take the time to recite my entire last name. He stopped after the first 4 letters, and that was it.
There's always a story behind nicknames like that. So why don't we get right into it? I thought I would start kind of broad and talk a little bit specifically around cryptocurrencies, maybe even more specifically Bitcoin. What do you see as some of the key opportunities in Bitcoin right now? And then maybe the second part of that would be, what do you see as some of the key challenges as well?
From an opportunity standpoint, I mean, frankly, there's too many of them to sit here and we could talk for hours and wouldn't cover them all. What I'll say with that is there are a couple of key ones. The first being, I think that there is a huge opportunity as like a global store of value still. So if you think about Bitcoin being a $1 trillion asset, that's just minuscule in the grand scheme of things on the kind of global financial scale. And so I think that there's going to be a very rapid kind of vacuum of value from other assets into Bitcoin. It will quite literally eat into other assets. If you look over the last 18 months or so, 12 months, gold is down 8%. Bitcoin is up over 400%. In some weird way, Bitcoin is literally eating gold. And I think that will continue. We'll probably see Bitcoin cross gold's market cap somewhere south of $10 trillion market cap size. So you're going to continue to see gold contract, you'll see Bitcoin expand, and we'll cross over there somewhere. The second big opportunity is in this idea of decentralized kind of digital payments, right? If you think of Bitcoin as an open monetary network, things like the Lightning Network, I think, are drastically undervalued in the market today. The idea that you can simply plug into this network, you don't have to talk to anyone, you don't have to do a business development deal with anyone, you don't have to invest in kind of the infrastructure out yourself. You basically plug right in, and the second you plug in, what you get is the decentralized digital open monetary network that is being supported by hundreds of thousands, if not millions of people around the world. So all that infrastructure, somebody once said that the fastest way to build a team is to plug into an open source network. And that's basically what people are doing here. And I think that will only continue. And then lastly, I think is there's a massive opportunity at the nation state level. So I think of adoption of these assets in 3 buckets. The first being individuals. This is one of the few assets where individuals have kind of front run the institutions and got in the game. We now see what I call the second cohort bucket, which is institutions themselves. This is both financial institutions and kind of what people think of asset managers or asset allocators, banks, etc., but also companies, so public and private corporations putting Bitcoin on the balance sheet, choosing to participate in the industry, etc. So institutions cohort 1, second cohort is retailers, Individuals is cohort 1, institutions is cohort 2. Cohort 3 is the nation states, and we've already seen El Salvador go ahead and embrace this. I'm not a expert on Salvadorian politics, don't want to be one. If you separate away the people versus the action, the idea that a country in June decided to embrace this technology, by September they had built and launched not only a mobile software application, but on top of that also launched a network of Bitcoin ATMs, both in their country and in the United States. And then within 4 weeks, now boast over 3 million users, which is about 50% of their entire country population. That's stuff that you would expect out of a technology startup, right? So the execution speed here has been pretty impressive. And so what I think that does is that drastically increases the incentive for other countries to start to participate. So we've got Brazil now talking about potentially introducing this as legal tender. We've got Panama, Ecuador, just go down the line, a bunch of countries talking about it. We'll see what happens. But to me, the economic incentive is so strong that I think a lot about this idea of, for individuals and institutions, of like an ignorance tax. So the ignorance tax basically is you buy Bitcoin at the price you deserve, and the longer you wait, the higher the ignorance tax. And ignorance could be you just didn't know about it, you didn't seek it out, you didn't find it, but it also could be you just dismissed it, right? So you knew about it and chose not to participate. It's not necessarily as negative as it sounds. It's just you pay a tax for being later than being earlier. When you start to talk about that at a nation state level, that ignorance tax becomes really, really painful, especially when you start talking about billions of dollars of economic value, the economic impact of having those companies domiciled in your geography, et cetera. I tend to think that it's a pretty important thing. And so, whether it's global store value, decentralized payments, or kind of the nation state adoption, I think those are probably the 3 big ones on top of mind right now, but there's a ton that we could talk through.
Yeah, actually, along those lines, on the nation state adoption, you mentioned countries like Brazil and Ecuador may look at approving Bitcoin as well. But do you see in the near future, maybe in the next 12 to 18 months, any of the more developed countries looking at adoption?
I think they're all thinking about it. The interesting part about individuals as like a cohort group, you don't necessarily think of it as a Bitcoin strategy. You just think of it, hey, does somebody buy Bitcoin or not? Do they participate or do they not? When you get into institutions, there's a lot more planning that goes on. There's a lot more strategic thinking. And so right now, I would say that every financial institution has already had the conversation and has at least determined their initial Bitcoin strategy. We're going to buy some, we're not going to buy some. We're going to participate in some way, we're not going to participate. We're going to build, products and services in this industry, we're not. We're going to build an internal team, we're not, right? Whatever the strategy is, again, neither one's necessarily right or wrong. It's just they've had the conversation, they've determined that strategy at a financial institution. Corporations are now starting to do this. So you've seen the public markets, the very large corporations, they started to do it after Michael Saylor, Square, Tesla, et cetera, all started to participate. And I think now what you're starting to get is nation states, a portion of the nation states are having that conversation. What's fascinating to me is they're not the nation states that you would expect. They're not the United States or Great Britain or France or Spain. No, it's South and Central America. It's countries in Africa, and frankly, it's the people who probably need it the most, right? The developing nations, and also the people who have the least to lose to go do something like this. And so that makes sense. Now, with all that said, China, Russia, the United States, et cetera, they've absolutely thought about it and and tried to figure out like how they're going to kind of participate. The thing though is with the developed nations, the innovator's dilemma takes over. Are you really going to disrupt yourself? Like, well, that sounds kind of crazy from a nation state level. And so they just choose to kind of sit it out. And so I think just naturally you're going to have the developing nations go ahead and before you ever get any participation from the developed nations.
So I do want to talk a little bit about China because it's kind of the polar opposite lately than El Salvador. But Elliot, do you want to add anything to Anthony's comments?
I just one thing. I'd be curious to hear your thoughts on this too. But it seems to me that the adoption by regular people took a massive step forward with the Twitter Strike integration last week, and that may be the kind of thing that forces places like the US or Canada into a position where they can't ignore it any further. I mean, if you think about Twitter in the US political context, it's become such a tool for all politicians. How do you stop a currency that's now riding on top of the, arguably the biggest information network for your political discussion in your country, right? Like it's pretty hard to keep these two things apart, even though the US may feel somewhat threatened by Bitcoin. But yeah, it's fascinating to see that and think about regulation. Like here in Canada, obviously we have ETFs now, right? And so once you have ETFs regulated, the government of Canada can't really turn their back on Bitcoin and cryptocurrencies because the government of Canada has said these are legitimate investments for use by citizens of Canada. And so I feel like there are, we're making these slow steps forward, and it's pretty hard to take the steps back. And that's kind of, I think it's easier when you're a nation state like El Salvador. What do they have to lose? They have only things to gain, obviously. But Canada and the US are getting to a point maybe where you get a tipping point where it's really hard for politicians to say no. And I think this year has been a landmark year for that, maybe more so than people expected, at the beginning of the year, in fact.
The one other thing I'd add to that is just like when you mentioned Twitter, separating out the asset and the network, I think is really interesting. Like Bitcoin, the asset is what people are buying and getting financial exposure to. The network ends up being what Twitter is using for the moment, right? And they have the ability to send dollars or Bitcoin or eventually euros or yen or what they'll be able to send anything across the network. And I think that that's like a really fascinating idea, is that you can essentially create a multi-currency supporting chain or payment rail and still have it be decentralized and digital, right? And so we'll see what plays out, but I just think it's really fascinating to watch this kind of come together the way it is.
So let's go to that opposite. Let's go to China for the moment. I mean, we've had a couple of bans this year in terms of crypto mining and then the currency itself. What, you want to provide some general observations on what's happening there and what you see continuing to happen over the next 6 to 9 months?
Thank you. That's what we should be saying. In North America, we should be saying thank you. I appreciate their abrasive positioning. I appreciate their negative posture. It is incredibly valuable for the United States and for North American citizens. If you think about what we just watched, there was over 60% of mining hash rate in China. The country kicked miners out. 90% of miners moved out. That global hash rate dropped more than 50%. And somehow, when all the dust settled, most of those miners moved to North America, and a very large portion of them now reside in the state of Texas. And so in our oil and gas capital, we now have a bunch of mining. And when those miners flew into or kind of took over Texas, they literally orange pilled the entire state. Oil and gas executives, this is all they want to talk about right now. Is, oh my God, you're telling me I can make 5, 6, 7 times as much money for my energy than I could in these other applications or use cases? Let's go, game on, right? And to me, that's what's so fascinating about this, is the economic incentive is so damn strong. And so it goes back to like, look, are we surprised that an authoritarian, kind of dictatorship doesn't like Bitcoin? No, of course not. It's a freedom technology. Everything of the American ethos is embodied in this technology: self-sovereignty, individual freedom, personal liberty, censorship resistance, like all that stuff is embodied. And then it provides democratic access to financial services, like all that stuff. Of course they don't like it. Like, it's actually surprising it took this long, right? And in some crazy way, they almost like helped build up the network, and then they like released it on the rest of the world and kicked it out. And so we probably aren't nearly as far along from an infrastructure standpoint without all of the things they did along the way. But now I think that that is the opportunity, right? Is like, which nation state is going to go and take the lead? I think the United States has got a pretty good shot at it, but we just got to make sure we don't screw around and do anything crazy to basically replicate what they've done in China.
Are you concerned about U.S. regulation around Bitcoin?
No. The banks have a very big say in U.S. regulation. And the banks own Bitcoin. The banks have built teams around Bitcoin. The banks have built products and services around Bitcoin. The banks tend to employ, before and after their appointments, those that go sit at the Federal Reserve, the Treasury, etc. And so if the banks have an outsized say, we check that box. The banks are Bitcoiners now. They figured out how to make money on it. On top of that, really the only people who could be drastically catastrophic for Bitcoin would be politicians. The Senate and Congress in the United States could vote on things, but there's congressmen and senators who now own the assets. And on top of that, they've seen in their congressional districts or their kind of populations the economic impact, the job creation, the financial security it brings, right? All these different things. And then that's just the financial impact and the ownership. When you overlay it with every politician is in the business of pleasing those that are the loudest, there's nobody on the internet that you want on your side more than Bitcoiners. Because when they're on your side, they're behind you. And so that's why politicians put their laser eyes on. That's why politicians are trying to understand the Bitcoin issue. They're trying to speak directly to those people. We're literally talking about a group of folks who memed imaginary internet money into the portfolios of Howard Marks, Ray Dalio, Steve Cohen, George Soros, Mike Novogratz, etc. The best investors in the world, the most widely well-respected investors in the world, Paul Tudor Jones, Stanley Druckenmiller, Kathy Wood, all these people. They now put literally ones and zeros that were created 12 years ago, just made up out of thin air, in their portfolios. That doesn't happen because there's a CEO or a marketing team or any of that stuff. It's because of this group of volunteers on the internet who built the infrastructure, they built the custody providers, they built the exchanges, they built messaging, right? They did all those things. And so I tend to think that like politicians are realizing like people are pretty resourceful, they're pretty good at mobilizing, they got a lot of money and financial resources. I probably want to be aligned with them. And naturally, when you have a politician meet an industry, the industry usually isn't the thing that kind of is malleable, right? It's usually the politician's views, and I think that's what we're watching play out here.
I do want to stay on regulation for a moment because I do think it dovetails into ETFs in the U.S. But before we do, Elliot, you want to cover off anything that Anthony just talked about?
Well, I think the interesting question of adoption in different industries comes up a lot. Our a former business partner of mine, and I think a friend of yours, Greg Foss, talks a lot about pricing oil in Bitcoin. Back to your point about Texas, and so maybe that also pushes things along, right? You end up with big energy producers who are realizing they're getting orange pilled, as you say. These folks are going to want to sell their energy and get Bitcoin for it. And when you get big industrial complexes who adopt technology like Bitcoin, it's not just individual people on Twitter. These are real industries with lobby groups and established relationships and everything else. So I think it can be pretty powerful when you start to combine those sort of forces together. It's pretty exciting to see.
So SEC ETFs. I know you've done a few podcasts on this in terms of when is the U.S. going to have an ETF. As you know, We were able to launch a Bitcoin and an Ether ETF earlier this year, and we actually just launched a multi-crypto ETF last week. So a lot of people around the world kind of view the Canadian regulators as being very forward-thinking in the approval process. You're talking to a lot of individuals in the U.S. right now. What are your observations of a pending ETF approval there?
How do they keep saying no? I mean, look, can they keep saying no? Absolutely, right? Do they have that right? For sure. Do I think that they will say no forever? Absolutely not. I really do think the big inflection point here, unfortunately, who the players were, right? When it was crypto native firms or firms that didn't come with hundreds of billions or trillions of dollars of assets, it's a lot easier to kind of say, we'll just wait.
Right.
If you go meet with Fidelity and Fidelity's like, hey, we got $1.7 trillion in assets, where's the ETF? Again, you can still say no, just a little bit harder to say no to them than it is to, some firm that is much smaller. And so I think that that's really the game here, is how do we, one, get them to say yes, which I think is ultimately good for the industry, right? It'll bring in more capital, it'll bring in certain types of investors, but it's actually a safer product, a more efficient product for the market, better pricing, all that kind of stuff. So all that's important. The second thing is, I think that there's a really big opportunity to allow those ETFs to serve as kind of the inflection point, if you will, and validation point for an entire group of folks who previously have thought that it wasn't real. So there's like a group of people who they're in. Then there's a group of people who are like, hey, I'm convinced that I should get allocation, but I can't because of the size of the market or the structure of the vehicles or whatever. And there's a whole group that's like, this is stupid, like the regulators hate it, there's no ETF, whatever. But the second that an ETF gets approved, you can kind of wipe away a lot of the critiques. And so it also then helps the with the folks who can't get in because of certain fund structures as well. And I think that's ultimately what we're going to see. Now the big question is like, when, right? When does it get approved? I don't know.
Well, it's there's a lot of ETF industry participants that believe that believe strongly that it's going to be this month, but it's not going to be it's not going to be spot Bitcoin. It's going to be Bitcoin futures that gets approved, and so it'll be interesting to see what happens. Elliot, maybe you want to kind of talk a little bit about the journey that we had at Evolve as it related to getting our cryptocurrency ETFs off the ground.
Yeah, for sure. We started in 2017 and we were going to do a futures product back then because we couldn't figure out Bitcoin custody. The solutions like Gemini and Coinbase, they weren't ready to take on investment fund clients back in 2017. Now, we didn't get there in 2017. The regulators just struggled with the asset class, but over time, they became more comfortable with the idea that, in an investment fund vehicle, this makes sense. And so by the time we started working on this again last year, we were able to point to products in the market that were closed-end structures that trade on the exchange. And there are a few in the States that are pretty large, but the price experience for investors wasn't good because they don't have the ETF market makers to keep the price close to the actual net assets. And so we were able to prevail upon the regulators to approve our ETF as we proved out the liquidity of the Bitcoin market. I mean, that's something that when you start to talk to the government about this, and there's so much they need to learn about because they don't have the default assumptions, it trades on the New York Stock Exchange, therefore I don't ask any more questions. We had to actually go through in detail and say, listen, here's this market, look how deep it is, look how liquid it is. We could have an ETF that takes in hundreds of millions of dollars a day, and we're not going to move the price around. Nobody's going to get in front of this. The way that we trade and settle it at Gemini, our products are using the same reference price as the futures are on the CME. So CME futures ETFs will be, tracking the same index price, but they'll have all the roll costs of the futures, whereas we just hold physical Bitcoin in our fund. But it was a back and forth with our regulators. I imagine the same thing's happening in the US. we're lucky here in Canada that we could explore these issues with the regulators in an open dialogue without kind of people feeling they're stuck in their positions. Sometimes it feels like that kind of narrative is going on in some countries as they talk about this. And we were able to find a solution where we were able to work with market makers, because it's a whole industry that comes together for this, right? We got bank market makers who have to quote on the ETF for investors to buy and sell from. They need to use the futures to take the risk off the table so that the price is accurate. We need to figure out custody. We had to figure out how to price our product, how to face the counterparty. All of those infrastructure pieces came together. So we were very happy to have Bitcoin in February, and then Ether, our Ether ETF in April, and now our new fund, which holds both of those in one ETF, which is the first of its kind to be multi-crypto. And so Canada's kind of ahead of the curve on this in some ways, but it may just be our approach and the style of conversation between issuers and regulators that makes us kind of lucky in that regard. I don't think fundamentally, based on the news I read, that the actual issues and concerns are really any different between any of the governments. They want to make sure that this stuff is, real, it's here, and it's legitimate. But I think to your point, Anthony, it's getting harder to say no, right? Because when you ask that question, you get a legitimate answer from somebody who's done the homework. It's really hard to point at that these days and say this isn't a real thing. It was kind of easier back before 2017 when it was much newer back then, and you didn't have the futures, and you didn't have adoption by big banks, and you didn't have adoption by, you have a nation state calling it legal tender. How do you say no? How do you say something's not real when that's happened, right? So anyway, that's a bit about our process. We actually are very hopeful for the US to get ETFs approved. We think it benefits all investors, and that includes, Canadians as well. And we all think we're on the same team here. So we're watching closely the story that what you're experiencing south of the border.
So Anthony, I'm curious also as to what your perspectives are in terms of institutional and even corporate adoption of Bitcoin. I can tell you that, since we launched our fund, I guess it's over 6 months ago now, we've obviously had some of those institutional conversations. We haven't seen a ton in Canada. We don't, as you probably know, you don't get a ton of visibility in ETFs in terms of who's buying, but we haven't seen a ton of institutional adoption here in Canada. We've seen that a lot of them have perhaps opted to invest in some of the crypto infrastructure companies instead of Bitcoin, for example, itself. What are you seeing in the US or even globally from an institutional adoption perspective?
Yeah, I think again, go back to kind of that institutional cohort, that second cohort of adoption. I really separated out into two groups. There's the corporations, and then there's like the institutions, like the financial institutions. When I look there, I think a lot about career risk, and the career risk has now been removed, and so it opens the door, gives the green light for a lot of institutions to participate. I'm fascinated with the corporations coming in. That I think is kind of a pretty clear one. I've got everything from very small startups that raise venture rounds asking, hey, should I put some of this in Bitcoin? Which is pretty crazy to think that we're here now, all the way up to large institutions, large hedge funds, etc. One of the groups that I believe we got the first U.S. public pension funds to allocate to Bitcoin in 2018 was pretty good. But now the big focus is, when are the sovereign wealth's going to capitulate? And some of them have kind of been, playing around the edges, investing in companies in the space. They're doing all that stuff. But like, who's the first sovereign wealth fund that just comes out and says, hey, we bought $3 billion worth of Bitcoin, and we're going to tell you we did it? Global FOMO kicks off, right? And so I think you can kind of watch, again, like the individuals were in, there was a FOMO phase, and that led to competition. Then you got some of the early financial institutions that actually kind of snowballed into, now more and more financial institutions have a Bitcoin strategy. Then you kind of have like the billionaire hedge fund class. In 2020, Paul Tudor Jones came out and said it. Then Stanley Druckenmiller, and then bam, it just spread like wildfire through the whole thing. Then all of a sudden you have endowments, foundations, hospital systems, those guys all getting in. And now what I think you're going to see, the next big one to fall, one is we got public pensions. I think there's 3 public pensions that are now in. That should kind of permeate through that world. and then they are sovereign wealth funds. Those sovereign wealth funds, they got a lot of money. Right? You start looking in the Middle East. I mean, there's folks that have 100 billion, 800, 900 billion. I mean, it's a lot of money in those sovereign wealth funds. And a small allocation of 1 or 2% could be quite impactful. So those are the things that I'm kind of thinking through. The only other thing I would say is it feels like there is a misunderstanding in the market. Like each one of these institutions is run by individuals. And so the individuals have to become Bitcoiners in some way before the institution does. And I think finally the career risk from a financial asset allocation standpoint has been removed. Now we have those people become Bitcoiners, the institution follows shortly thereafter. And then just in terms of kind of size of allocations, we previously were seeing people, I put $10 million, $20 million. Now we're starting to see big numbers. Right now we're starting to see, Tesla came out, so we bought $1.5 billion worth of Bitcoin. Right, you're starting to see some of the banks, etc. We saw U.S. Bank announce with this partnership with NYDIG. We saw Fidelity come out with a huge announcement. We're seeing Mass Mutual, an insurance company, a 9-figure investment. So like it's starting to grow in size, and I tend to just zoom out and say like, what do we need for more of this to happen? It's just time, in my opinion. Literally, it's going to take 10 more years, and then we're going to all look back and be like, remember that when like nobody owned that? Like that was crazy. Right, but it's going to take time for us to kind of get more familiarity, get people comfortable, see the track record of the asset, and then they'll eventually jump in.
Good. Anything to add?
Yeah, I would just echo that. What you're saying is what we hear from the big investors we've been talking to. I would say there are a few things that came out of conversations after we launched our Bitcoin fund in February. The first is these institutions who aren't using Bitcoin yet may be hyper-informed, but just haven't made the investment committee decision. And so what we found in those conversations was a lot of times you're talking to somebody and you say, you start talking about Bitcoin, they say, oh, I know about it. I own it personally. We're not owning it as a group yet or as an institution yet. But that's a big shift from 4 years ago. The career risk thing is 100% true. That couldn't be more true. Back in 2017, those conversations, it was all about, I can't look at this, I have career risk. Now it's, I can't be ignorant to this or I have career risk. And the Tesla thing has changed some minds in some of the sort of institutional investors that we've talked to who have said at the investment committees that they go to, they can't ignore it. It's not possible because it's owned by companies that they own because of the index investing they do. If you own the S&P 500, you own some Bitcoin. You just do today. So you can't ignore that now. You can't keep your head in the sand anymore. It's impossible. So that there's this like virtuous cycle where you've got corporate ownership spurs institutional investment ownership, which makes these conversations happen. And at the committee, there are actually a whole bunch of people who might not have admitted it to their colleagues, but they bought some, they have their own wallet, they're doing it on the side, or now with ETFs, they own a little bit themselves. That's all kind of percolating around, and we hear about it a lot in our conversations. So I would agree, I don't think the big money is here yet, but I think the big money has never been more prepared on the sidelines than it is today. So that's unbelievably exciting. And I mean, I'm just talking about the Canadian investors we're talking to, let alone the sovereign wealth funds that you might be in contact with around the world.
So last question. There's a lot of people on this podcast webinar that are investment advisors here in Canada. And since we launched our ETF, we've obviously had a lot of conversations with investment advisors here in Canada. I would say that, 95% of them are not actively using any crypto ETFs with client portfolios for whatever reason. Primarily, it would be, probably one of two reasons or a combination. They either don't believe in it or it's too volatile for clients. And I can understand that, right? I mean, if your client's looking through their statement and oftentimes they're going to focus on the one thing that's down, and there's a chance that, at a certain time, Bitcoin's going to be down. In that period of time, it's going to be red. So really what they're doing is they're facilitating trades for a lot of their clients, because clients are calling them up saying, I want to buy Bitcoin. And then the advisor is saying, okay, well, why don't you buy this Bitcoin ETF? Now, I know you don't have a lot of options in the US, but have you spoken to RIAs there or some of the dealers in the US, and what is their perspective on crypto? Because I've seen some interviews with some of the largest RIAs saying that they're spreading crypto right across their like 1 or 2% of their client portfolios. But what are you seeing there in the US?
I mean, listen, in 2018, I said this, and the legacy financial world was laughing. And I said multiple times, it is a violation of your fiduciary duty to not have exposure to this asset. And people said, what do you mean? That's crazy. And I said, it's not just about the financial return. The fiduciary duty is the best return you can achieve evaluated on a risk reward framework. So you can't just look at how much money could I make. You also have to look at what is the risk that I'm taking. You have to look at the totality of the asset, including things like the Sharpe ratio and the correlations and the potential return, the drawdowns, all that stuff. If I look at Bitcoin, and this data is a little old, maybe like 8-9 months old, but there was a 5-year period about 9 months ago where if you had invested in a 60-40 global portfolio, you'd return 7.2%. If you had taken 0.5% from stocks, 0.5% from bonds, and allocated it to Bitcoin, so you would have been, 59.5% to stocks, 39.5% to bonds, 1% to Bitcoin. You would have increased your return from 7.2 to 9.2%. If that 1% had gone to zero, you would have lost 20 basis points, down to 7%. So 200 basis point upside, 20 basis point downside. If you had gotten that 1% exposure to Bitcoin, you would have increased your Sharpe ratio by over 20%. And so when you look at it as not only a potential return driver in the portfolio of 200 basis points, but also as a non-correlated asset, it's got a correlation of about 0.15 to other traditional assets, and also a very, very high Sharpe ratio, you then start to realize, wait a second, this is like the apex predator of financial markets, right? This is the asset. If you don't have exposure to this asset, there's problems, right? And I think one of the things that we are now seeing people start to wake up to is realizing it's not only a question of should I buy Bitcoin or should I not? There's also a question of if I don't buy Bitcoin, what else am I going to buy? There's trillions of dollars that have been printed. In 2008, 2009, the Fed's balance sheet in the US was 900 billion. Today, it's about 8.5 trillion. We're going to hit a 10-bagger in about 12, 13 years in the Fed's balance sheet. Okay, at the same time, we have 5+% CPI inflation, got over 4% core inflation. Earlier this year, they hit record levels where CPI was the highest it's been in 13 years and core inflation was the highest it's been in 30 years. So where do you go? Okay, I want to go to real estate. Well, it's an illiquid asset that doesn't have nearly the upside, and also it actually doesn't have nearly the non-correlation. I want to go to equities. Great, but problem again is high levels of correlation, and depending on what equities you buy, they have a really, really high dependence on no tapering, no Fed action, etc. But when you look at something like Bitcoin, you get the liquidity, you get the upside, you get the non-correlation, you get the Sharpe ratio, etc. You have to put it in a portfolio. And so what I think is quickly happening is the RIAs especially are being pulled by their clients, similar to what you said, where clients are calling up saying, hey, I want exposure to this, I want exposure to this. And then once a couple of their big clients call and ask, it almost provides them air cover for everyone else, right? Because to some degree, like the people you don't want to lose if you're an RIA is your biggest clients, right? You're okay actually if you lose, 100K client here or there. You don't want to lose any clients, but if you happen to lose one of them, no problem. Now I think where we've gotten to is the really large clients. They're the ones who've actually called and said, get me the exposure. And so now it's kind of trickling down at an RIA. And also, look, let's just be frank. It's easy to say, well, Paul Tudor Jones, Stanley Druckenmiller, Steve Cohen, and them all own it. And oh, by the way, Fidelity owns it, and JP Morgan's helping their wealth clients buy it. And now all of a sudden, the SEC chairman, the Federal Reserve chairman both said they're not going to ban it, and they said it's not a security. Like that all wasn't there 5 years ago. It's here now, and so that's why I think you see them really starting to allocate much more aggressively.
Elliot, anything to add?
No, I think that's well said. I mean, it does feel like this has been one of those years where more and more people are nodding their heads saying the time is now, who maybe were on the sidelines before. So, it's hard to see when you weigh the news, right? You weigh, well, China says no, and then you weigh all this other stuff. It's hard to kind of think about this in any other way other than you have to look at it, you have to think about it, you have to decide how you're going to use it. And it is possible to think about allocations that take into account the volatility and still provide a good spot for it in your portfolio and allow you to keep an eye on it. So, yeah, I would agree with everything Anthony said.
And there's also another dimension to it for sure, right? I mean, I saw this article last week, I believe, that said that there are more account holders at Coinbase than there are at Schwab and Ameritrade combined. So what that means is that, on both sides of the border, most likely almost all of your clients or many of your clients actually own cryptocurrency. They opened up a digital wallet. So here in Canada, at least, given the fact that we've got ETFs, doesn't it make sense to move it potentially into your brokerage account, we have things like your IRAs, but we have RSPs and TFSAs and so on and so forth. So I think that's where a lot of advisors are potentially missing the opportunity on both sides of the border, not knowing that a lot of their clients already did open up a digital wallet that's just actually not in their portfolio. Anyways, with that, I would like to thank you very much, Anthony, and of course, Elliot, for joining us today. Really appreciated the insights and look forward to doing this again soon.
Absolutely. Thank you guys so much for having me. Big fans of what you guys are doing, so keep it up.
Thanks.
You have been listening to the Innovators Behind Disruption, a podcast series brought to you by Evolve ETFs. Remain educated, be informed. Sign up for our newsletter and learn more at evolveetfs.com.